Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China RES Power Interim Report. China Resources Power Holdings Company Limited offers a diverse range of businesses and services, including investment and development of power plants, operation and management of coal-fired, gas-fired, wind, hydroelectric and photovoltaic power plants, coal mining, energy distribution, power sales, smart energy solutions, renewable energy projects, wind farms, photovoltaic power plants, hydroelectric power plants. The stock price of China Resources Power has dropped by 14.66% over the past year due to several factors. One significant event was the announcement of the company's first half 2025 results on August 21, 2025, which led to a 6% decline in shares. Other contributing factors include a valuation cut by 13% due to lower tariffs and concerns from analysts that China's decarbonization goals would decrease demand for coal-fired power generation, negatively impacting the company's thermal power segment. Additionally, market capitalization declined by 5.3% around June 22, 2025, with private companies bearing the brunt of the drop. These factors collectively contributed to the decline in the stock price over the past year. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth. The main contributors to revenue growth are the expansion into new regions, increase in wind farms and photovoltaic power plants, and growth in total attributable grid-connected installed capacity. Additionally, external sales in the renewable energy segment increased significantly, driven by a 10.7% rise in renewable energy revenue. On the other hand, revenue decline is primarily attributed to a decrease in average on-grid tariff of consolidated coal-fired power plants and wind power projects, which was partially offset by depreciation of RMB against HK dollar. Furthermore, net generation volume of consolidated power plants decreased, leading to a 6% decline in thermal power segment revenue. The company is indeed generating positive operating cash flow, as evident from the financial summary provided. The data on pages 26 and 36 confirm this trend, with operating cash flows increasing to $421,111,000 in 2025 compared to $234,567,000 in 2024. Similarly, page 36 shows a significant increase in operating cash flow from $19.38 billion in 2024 to $21.78 billion in 2025. Furthermore, the net cash inflow from operating activities on page 46 is $14,116 million, providing additional confirmation of the company's positive operating cash flow. The company's financial performance reveals a mixed picture across various segments and regions. The thermal power segment and wind power segment underperformed, with decreases in average on-grid tariff and sales of power generated from these sources. In contrast, the renewable energy segment showed improvement, with an increase in sales of $162,580. However, it's worth noting that the overall turnover decreased by 1.7% compared to the same period last year. The China region was a notable bright spot, with substantial operations carried out there. The renewable energy segment also demonstrated strong profitability, with a profit before income tax of $695,670. Overall, while some segments and regions struggled, others showed resilience and growth. Management is optimistic about the company's outlook, citing progress in strategic initiatives aimed at improving operational efficiency and reducing costs. Additionally, the company plans to expand its equity interest in Shenyang China Resources Thermal Power Co., Limited, through a further acquisition of shares from non-controlling shareholders. To finance ongoing investments and operations, management intends to utilize available borrowing facilities and has already raised $7.2 billion through the issuance of new shares. The company has a history of paying out dividends to its shareholders. In recent years, it has declared and paid out significant amounts in dividends. For instance, in 2025, the company paid out $660,521, while in 2024, it paid out $644,121. This demonstrates the company's commitment to returning value to its investors through dividend payments. That concludes the financial summary for China RES Power. Feel free to comment below and I will be happy to answer them when possible.